World's biggest financial leaders gathering in Saudi Arabia this week for the FII Institute's 8th annual summit. Our Sara Eisen is there live, hosted a blockbuster panel that included the CEOs of Citi, Morgan Stanley, Apollo, Carlyle, and Goldman. Hey, Sara.
Hi, good to see you, Carl. This was not a typical panel. 12 leading bankers from around the world around a table. It was meant to be like a boardroom, and it really highlighted that here in Riyadh, this is the financial epicenter of the world for this week, and just how much enthusiasm and demand there is for Saudi Arabia, its transition, and investing in its companies and in the infrastructure. Got a chance to speak with a number of U.S. bank CEOs, including Jane Fraser of Citigroup, about what they see in the global economy right now and how it's increasingly looking lopsided and fragmented into where the growth is. A lot of optimism and bullishness on the U.S. Here's what she said about what she sees from the U.S. consumer right now.
In the US, let's look at the consumer. The consumer is broadly healthy, a tad more discerning than before, and their spending is still growing. But a lot of that is being driven by the affluent consumer. The middle-income consumer is probably a bit, more mindful about where they're spending. And then the lower income is where we've seen some of the inflation pressures really biting in as wage growth hasn't quite kept up.
Harvey Schwartz, the CEO of Carlyle, was quick to give credit to the Federal Reserve and other central bankers for managing us through the inflation spike and coming out seemingly in a strong place, at least in the U.S. economy. I asked the entire group to raise their hand for the number of rate cuts that they forecast for the rest of the year. Nearly everyone raised their hand for one rate cut by the end of the year, and not two. Nobody raised their hand for two rate cuts, which is what the market expects at this point. So I asked David Solomon, the CEO of Goldman Sachs, what he thinks will happen in 2025 with the Fed. Here's what he said.
I think it's hard to think about monetary policy in 2025 in the United States until you get through the election and we get a clearer sense
of
policy actions, because policy will shape monetary policy. I listened to the earlier panel, and one of the comments that I agreed with is that structurally inflation is more embedded in the global economy than the current narrative. That doesn't mean that it's going to rear its head in a particularly ugly way, but I do think there's the potential, depending on policy actions that are taken, that it can be more of a headwind than the current market consensus.
The election is clearly a wild card for bankers, business leaders, here, government officials all over the world. And when I asked the panel how it would influence their business, the markets, Apollo's Mark Rowan said it will make a pretty big difference. Listen.
I think there's an absolute chill on M&A activity as a result of current policy, and I think you'll see it freed up if there's a change in regime. I think you'll see investment liberalization if there's a change in government. But remember,
if Trump wins.
If Trump wins. But we're all talking about in the U.S. of shades of good. We really are talking about shades of good. And to come back to your point on rates, we massively increase rates, and yet stock market at a record high, no unemployment, capital market issuance at will, and we're stimulating the economy. I'm trying to remember why we're cutting rates, other than to try and equalize the bottom quartile.
Inflation's come down. He basically said it doesn't know why we're cutting rates. We've seen the third year in a row where the U.S. is the top destination for foreign direct investment, where we're still rolling out big programs of spending that include the Infrastructure Act and the CHIPS Act. So again, this theme of the U.S. being a really big bright spot in the global economy, but also the Middle East and Saudi in particular being a bright spot, guys, which it comes at an interesting time where geopolitical tensions are high. There is a war raging not too far away, which has had an impact. We had the head of the Islamic Development Bank on the panel. He says it's had a chilling impact, the continuing war when it comes to investment, and yet still plenty of optimism for what Saudi in particular is doing, and especially around AI. I said it was It was a financial conference, but there are some tech leaders here as well. Ruth Porat, for instance, of Alphabet is here. Ray Dalio is another frequent guest that makes an appearance here at FII. He's going to be our guest on this show tomorrow after he is speaking on stage here, just about sort of the global opportunity set right now, how big AI factors in. And guys, Elon Musk was just speaking in the room behind me on the big stage. He was joining remote via video. I think he's busy in campaign mode a week ahead of the election. But he did say, and I just wanted to share some comments about and predictions. He said, as far as worrying about AI, he said the future, it is a significant threat, but the longer term threat is global population declining. And he also said by 2040, there will be more humanoid robots than there will be people. So Musk predictions on AI, which is a huge topic here for PIF, which is the big Saudi sovereign wealth fund, nearly $1 trillion. And of course, the kingdom, as it, again, diversifies away from oil. Back over to you guys.